you gentlemen continue to
Great. Well, thank you so much, and welcome everyone to this panel discussion on the most recent stimulus and loan packages. As we go along, as we mentioned, just submit your questions by the Q&A, and we'll be reviewing those and answering those as they come in. We also are going to be recording this, so we'll send, if you registered, we have your email, so we'll send you a link to that along with some of the collaterals via email after this discussion ends. My name is Chris. I am a small business owner myself. Today I'm serving as your moderator and also representing the Entrepreneur Organization of Cincinnati, which for those of you who don't know, it's an amazing community of like-minded entrepreneurs who come together to learn and grow in both business and their personal lives. And speaking of personal lives, I don't know if you guys have this, but my wife has been busy creating all these rules for living through this mess. Kind of like, I don't know if you've seen the movie Zombieland, but one of the rules she has is that you need to try on your jeans at least once a week to make sure they still fit. So I'm thankful for this webinar today because it was my excuse to try on my jeans and also wear a collared shirt. So I've confirmed my jeans fit, and hopefully all the panelists have jeans that still fit too, if they're even wearing pants, I'm not sure. But quickly want to introduce everyone. We've got Jim Collins from Focus CFO, Pat Longo from HCDC. I don't know if he's on, it looks like he hasn't popped on yet, but Pat will be joining us. He heads their development program and also does a ton of SBA lending. We have Keith Carlson from Von Lehman CPAs and Tom Okenberg, who's a partner at Wood and Lamping Attorneys. So I'm going to share my screen real quick. We just have just a few slides, but we're going to send detailed collaterals out after that talk a lot about some of the things we're discussing here today. So as I mentioned, we've got Keith from Von Lehman and Tom from Wood Lamping. And the agenda, very basically, we're going to go over the loan programs today, the two basic SBA programs that are out. We're going to talk about the disaster loan program and then the CARES Act, what's forgiven, what's not forgiven, what's the government doing for us, and then most importantly, what we can be doing right now to sort of take advantage of some of these programs that have just been launched. So I guess I will throw it over to Keith to kind of get us sort of rolling here. Or to Tom, either one.
Yeah, it doesn't look like Keith is hooked in just yet. But so why don't we just kind of hit the high level of the
sure
COVID-19 related lending programs. There are, of course, there's the EIDL, which we'll talk about here shortly, which is the disaster loan program, the CARES Act, which contains or includes one of the most widely discussed loan programs, certainly in my memory, which is the Payroll Protection Program. And we'll get to that momentarily. I did want to throw out the one other program that is not really getting a lot of attention because it is limited to current SBA borrowers, either under the 7A program or the 504 program. But that is the provision under the CARES Act, where the SBA will make the next 6 months of payments of principal, interest, and fees for any current borrower under the 7A program or under the 504 loan program. So if any of you have tuned in now have either a 7A or a 504 loan, the SBA will, within the next 30 days, begin making your regular monthly payments of principal and interest for a period of 6 months. So that is part of the CARES Act, but it's not really getting a lot of play because not everybody has SBA loans. But be aware that if you do, that those payments are being made by SBA. There is no repayment plan as you'll find with the deferment programs. And this, by the way, is not a deferment. This is simply a payment by the SBA for its borrowers. In addition to these payments, you can then get deferments depending upon the loan program that you're looking at. So, so I did want to touch on that one initially, and that's just the SBA payment plan. So there's that one. Keith, are you on audio yet?
Yes, I am.
Okay, I started ahead of you, and I thought I would just throw out the SBA payment plan on the 6 months for current borrowers. And if you want to jump in on kind of the overview of the programs that are out there.
Yeah, sure. Thanks for that, and sorry for being just a minute late. I think from my perspective, and this is again Keith Carlson at Von Lehman, and from my perspective, a lot of the questions I've been getting from clients this week stem from a good deal of confusion as it relates to, I guess, multiple programs being offered by the SBA, and part of that is 2.5 or 3 weeks ago when this crisis really started, there was definitely an initial response that the U.S. administration rolled out. That was the disaster loan program and also the emergency grants that a lot of people were very, very familiar with. And that program obviously served a very immediate purpose. And as many people know or had gotten to know, that was a program where you actually went and applied directly to the U.S. The SBA website to obtain access to either a grant or disaster loans. And there was a fairly set number of requirements or things you had to do to apply. Well, fast forward to last week, and we've got an entirely new program that's come out, the PPP program, or what we at Von Lehman are really calling the debt forgiveness program. And that's an entirely separate ball of wax and different ball game. And quite frankly, from many's, I think, point of view, has not made the disaster loans and grants obsolete, but it's certainly made them, I'd say, much less prevalent amongst the clients, at least that we're dealing with at Von Lehman. And the PPP program, in essence, is what I said earlier. It's a debt forgiveness program whereby companies can actually work directly with their lender or lenders in the community that have an SBA program to apply for loans. It is very formulaic driven. So unlike the disaster loans, which seem to have some subjectivity with regards to economic impairment, these loans with the PPP program are based off of really your trailing 12-month payroll costs. And when I say payroll costs, it's a pretty broad definition of, what are you paying your employees on a base salary basis? What are you paying them in terms of bonuses, taxes, benefits, etc.? And so if you, essentially take your trailing 12-month payroll costs, average those out, come up with a monthly total, and then multiply that number by 2.5 times, that's more or less what the banks are going to be doing in terms of calculating the amount that you can actually borrow under this PPP program. And the beauty of the program, or what everyone I think is excited about, is the relief function associated with it, which is after you borrow the money, say you get your amount, you can went through your calculation, the lender says you can get X amount, so long as you go through the next 8 weeks after you take the proceeds under this loan program, and you don't go through and make drastic cuts to your workforce and or their compensation program, you should be able to enjoy a fairly nice forgiveness program, which will act as somewhat as a stimulus for small businesses out there. So those are the two broad programs that are out there. And with that, I'm going to take a breath and turn it back over to Tom and see if he has anything he wants to add there.
No, I think that was a great overview, and I think that's really where we want to start. Is let people know these are the programs that are available right now. The portal for the EIDL, or the Economic Injury Disaster Loan, that's open. But what we also want to let people know is that on the PPP loan, Payroll Protection Program loans, guidance is currently being formed by the Treasury Department and by the Small Business Administration to send out, which will inform lenders as to how this program is going to work. Now, as Keith alluded to, it is very formulaic. You look at your 2.5 months of payroll, and you can figure out pretty much what your loan is going to be. But some of the wild cards right now include the application process, on guidance for that, and that is supposed to be coming, virtually any hour now, so that all of the lenders can be informed as to what the application process is going to look like. And frankly, we're hoping that SBA will send out a template for an application, which will also include a certification by the borrowers that they are, one, eligible, and virtually everybody on this call is going to be eligible, because the eligibility threshold is pretty low. You have to have been in business February 15th of this year and have made payments to employees via payroll or paid payroll taxes. So virtually everybody's going to be eligible for that, but we don't know what the application process is going to be like. What we're hoping to do today is to give you all some informed or some thoughts based on conferences we've been involved in and whatnot. One of the key provisions, or one of the things that we'd ask people to do is, and Keith alluded to this, is if you've got a relationship with a lender right now and you are interested in applying for the PPP loan, that is who you should start with. I have gotten feedback from several lenders that they will service the applications of their current customers first. Now, while there's $348 billion in this program, virtually everybody and their brother and sister are going to apply for these, as they should. But if you're coming in as an outsider to a lender with whom you have no prior relationship, there's a possibility that your application is going to be moved down in the queue until they get through their current customers. So keep that in mind. One of the other things that I wanted to kind of disseminate is, even though we don't have an application yet, one of the things we're advising people to be is application ready. And the thought there is there are going to be some fundamental documents that all lenders are going to be requiring of their borrowers. And things like that include either your current year or your prior year tax returns, your quarterly, employer's quarterly tax forms, IRS Form 941, financial statements, including balance sheets and P&L statements, and then payroll expenses. That ultimately is going to drive the amount of the PPP loan. So you can begin to gather those things so that you are ready when the application process comes online. And I think the bulk of lenders are going to be doing this online. There's just going to be too many applications for them to handle any other way. So those are the kind of things we kind of want to push out to everybody today, is things to be thinking about as we approach the actual application process.
Yeah. So basically this changes daily and hourly. In fact, Keith had a slide deck he made 2 days ago, and we couldn't use it today because it had already changed. The government keeps adding to the program, and it just keeps ballooning up like a cumulonimbus cloud. It's like insane. So the bulk of questions that have come through so far in the chat are regarding 1099 employees, which I know 1099 employee isn't technically an employee for the lawyers on the call, Tom. But for those who we are 1099ing, can they be included in the payroll loan? What about independent contractors that are, like your hairstylist or your massage therapist or someone that's working individually on their own? Talk a little bit about that.
Absolutely. And Keith, as the accountant, you'll know this better than I, but the eligibility for the PPP does include self-employed individuals, independent contractors, and sole proprietors. Now, they're going to have to provide some additional documentation, including 1099s and some other similar documentation to show what their income was, so they can establish payroll, if you will, to calculate what the amount of the loan would be. But they are absolutely eligible for the PPP loan.
Yeah, I'd agree with that, Tom.
Okay, so I would encourage people, when in doubt, apply. I think that sitting on the sidelines, this is an opportunity to keep some powder dry, because again, talk about things changing from day to day. The closure periods for schools, businesses, and states seems to be extending day by day. So the ability to get a loan that'll carry 2 months of payroll plus some additional eligible expenses such as rent, utilities, mortgage interest, things of that nature, and allows the businesses and the borrowers to keep some of their, whether it's a line of credit or just some accumulated cash, keep that on the sidelines for as long as possible until we get a real idea of how long this thing's going to go on.
Yeah, and one thing I'll kind of add to that comment is everyone's lender is going to have their own. I think that the requirements or pieces of information that they're going to ask of you as people that are applying for these loans will be somewhat unique, but the template or calculator that they use to actually calculate the amount that you're able to borrow, and then how that amount is calculated on the back end for purposes of forgiveness is going to ultimately be unique. And so that you're not going to get the same answer if you go to Huntington that you get at PNC, and the same answer you would get at KeyBank. I think there's going to be real variability. So my advice to everyone on the phone is probably, if you're trying to figure out what this means to you, worry about getting in the right zip code as opposed to getting super precise, because I think your lender is ultimately going to have the final say on it anyways.
And to that point on the PPP loan, the lenders are, one of the nice things that I think you're going to see coming through here is that the lenders are being held harmless by SBA as long as they use prudent lending standards. But because for the PPP there is no collateral requirement and no personal guarantee, the lender review of these applications is going to be fairly streamlined. They're really going to be looking at the business and, obviously cash flow, ability to repay potentially. But again, all this is against the backdrop of a 100% SBA guarantee, and number two, likelihood of forgiveness so long as the borrowers adequately document their payroll and their other eligible expenses. Without that documentation, you get no forgiveness. And that has been made clear in the CARES Act, that the documentation is the key to the forgiveness. So if you apply for and receive one of these loans and use it for the appropriate purpose, such as 2 months of payroll, again, rent, mortgage expense, and utilities, you need to be able to document that. They're very clear that if you don't, forgiveness is out.
So what about for a sole prop or an LLC where, we had one question that says, I own a restaurant, it's currently closed. The only salary employees are my wife and I. Are we able to submit for payroll assistance? And how is that calculated? I know a lot of small business owners pay themselves a smaller salary and then take distribution to sort of make up the difference. And I've heard that if you have, one of the things I heard is if they look at your net income and anything, they'll take you can take up to $100,000 of it, and that will apply to your monthly payroll expenses. Is that accurate? What about the mom and pops who are just, paying themselves, but who are an LLC? They're not a 1099 sort of situation.
Tom, I'll take first swing at this, and then you can kind of back me up. I mean, for the people that have been coming to me in terms of asking questions like that, like, hey, I have a shuttered business and I don't know when I'm going to be able to reopen it. I mean, that's more of a clear-cut case to me for someone that should go to the SBA website and look directly at the disaster loans and the grants themselves, just because if you go through the PPP, the purpose of it is to really get debt forgiveness, and to get debt forgiveness, you have to continue to employ people. And so it's essentially a waste of time to go through that process and get the loan if essentially you're just going to have a piece of debt sitting on your balance sheet that you're going to have to eventually repay. I think what I would advise my clients to do is to go get the disaster loan, and you would actually have probably slightly better odds at getting a more favorable structure on that disaster loan than you would the PPP loan that for the piece that doesn't get forgiven. And so what I mean when I say that, say you take the PPP loan, and let's just say for simplicity purposes, you get $100,000. The amount that isn't forgiven, let's just say it's 50 grand for simplicity's sake, would get restructured as a 10-year note with 4% interest, or at least that's what I'm hearing is contemplated right now. That's not bad, and that's not too shabby. As a matter of fact, a lot of people would call that very attractive. But what I've also heard on the disaster loans is that you can get slightly better or more favorable terms in terms of the length of the term on the note, in addition to the deferment programs. So Tom, I don't know if you have anything to add there.
Yeah, and to kind of to flesh that out a little bit, on the disaster loan, the interest rate is 3.75% with a term up to 30 years. And nonprofits who also are eligible for the disaster loans, the interest rate there is 2.75%. So you are going to get potentially, and I say potentially, a small or a lower interest rate. The reason I say potentially is because under the PPP, the current interest, the way that the CARE Act reads is the maximum interest rate is 4%. We have been led to believe that the guidance that comes out may provide for lower interest rates, since that the 4% is the ceiling. Now, what I would also throw out there, which differs a little bit from Keith, is when you're applying for a PPP, whether or not you are going to use those proceeds for payroll, for the eligible purpose, the bulk of them, and whether you'll have other expenses to offset, since it's 2.5%. You'll know that going in. If you don't have those expenses, he's right. Why take on that debt if you're not going to be able to get it forgiven? But one of the things that we're still looking for guidance on also is whether you can get an EIDL loan and a PPP loan. The CARE Act allows for EIDL loans that were made after January 31st of this year and up until a PPP loan is made to the same business. You can roll the EIDL loan into the PPP loan. Now, whether you want to do that, you can do that. That is a possibility. What we are waiting on guidance on is, can you have both of them? Because again, the PPP loan is eight weeks of payroll. So after 8 weeks, do you still need money to supplement payroll, or where's that coming from? An EIDL loan could be used for that following those 8 weeks. And again, to Keith's point, longer term, potentially lower interest rates. So once we find out if you can get both, some combination of those may be best for some of you.
Excellent. I'm trying to respond to some of the messages here on the Q&A as well as you guys are talking. There is some questions on the 1099, kind of to back up on the 1099. The individuals who are able to apply for that are the 1099 individuals. Do the individuals apply for that personally, or does the business apply for that on the behalf of the people who are the 1099ers?
Keith, I'm going to let you take a whack at that because.
Or don't we know?
I don't have an answer.
Yeah, I mean, my actual take on that is it's the business will not be able to claim the 1099ers. It's the 1099ers that'll be able to apply themselves.
That's my thought too, because technically they're not employees. So you would think that
right.
They would have to do that on their own. Okay. Next question. If you have two businesses, do you need to apply for two separate loans, or does it roll into one, almost like the FMLA where it goes, sort of up the tree?
I would apply for two separate loans if they are two separate and distinct businesses and business entities. You're going to have two separate payrolls, et cetera. So I would actually do two separate loans. And one of the other things to keep in mind on this is that in addition, if you are in the food service business, you have multiple locations. If the aggregate number of employees for all those locations exceeds 500, you can still apply for a PPP loan, because the food service industry and the hotel industry are treated differently under the PPP. And you can treat each location as its own standalone, even if they fall under kind of one roof. And likewise with franchises. If you're a franchise and the SBA has given you a franchise identification number, identifier number, you can also apply for a PPP loan. So the simple answer is both companies should apply, but I just wanted to point out that if you have multiple locations, and that tends to bump you over the 500 employee list, you can treat them individually in food service and accommodations.
And what about when you're calculating your payroll? Do you include bonuses? I know you include tips, but what about bonuses? Is that included as compensation as well?
You do, yeah. So it's a pretty broad footprint in terms of what they consider compensation to employees, and so there's a pretty healthy list of things that are costs attributable to employees, such as base, bonus, benefits, taxes, things of that nature that get captured into what is considered total compensation for the employee.
Which also, I'm just looking at that definition because Keith's absolutely right. It's very broad. It also includes commissions, payment of vacation, parental, family, medical, and sick leave, payment of group health benefits, things like that that would be considered in the definition of payroll. So it is a pretty broad definition to calculate that number. Now, the other thing to take into account, though, is what does the inclusion of the bonus do for you? Because one of the things that we're looking at is that $100,000 cap. So any employee or anybody considered in payroll that makes more than $100,000, our current information, and that comes from those who drafted the legislation, is that the first 100,000 of that compensation is to be included in your calculation of payroll. So that's now that has not come out in formal SBA or Treasury guidance. That did, though, come from the drafters of the legislation. So point being, if a bonus ends up putting you over 100,000 or an employee over 100,000, it's not going to count anyway to the extent that it exceeds the $100,000 number.
So for businesses that are currently shuttered and closed and not sure when they're going to reopen, restaurants and service businesses specifically, what is the one thought is, you don't want to go in right now and apply for this loan, because then you're going to get it. You're going to pay your people for 2 months and you still might be closed. And then what? So what's the latest you can wait to apply for the loan? Do you think the funds are going to dry up? And is there a mechanism to delay the loan origination in the event that the loan is approved before the business reopens?
So you've got until virtually, I don't know the exact date, Tom, if you've got that offhand, but it's the end of June, I think, or
June 30.
June 30th to apply for it. I mean, there is a general concern out there that I keep hearing about, hey, we're going to run out of funds on this particular program from the government because it's only like a $350 billion package from the government. And I hear the concern loud and clear, but I truly do believe if we blow through that ceiling or that cap, that they'll raise the limits on those. Because in some ways, I mean, this isn't like the government is actually turning on the cash machine to put dollars on the streets, because they're not technically buying these loans right off the bat. In many cases, they're letting the banks actually hold the paper, earn the interest without purchasing the paper back. And so I think they would have no problem flexing this program up if it was working well and they were finding that the banks were putting the liquidity on the street. But yeah, there is that fear. When there's a cap, everyone's always going to say, I want to get in line and make sure my place is held.
And further to Keith's point on that, Chris, there's already been discussion today about a fourth stimulus package that could occur. And what we're hearing is that when Congress gets back after Easter, that will be taken up immediately. So if it looks like there's going to be a run on this program, I agree with Keith that I think they'll bump those limits up. And then there will be some other fixes, some other things for example, we hear some discussion about potential fee waiver and things like that for SBA loans, which could be significant for borrowers if they just go through the regular 7(a) process, and also through the 504 process. What kind of benefits are going to be provided to those borrowers, and that may be in the fourth stimulus package.
Okay. And for people who are not as focused on payroll, there's a couple questions from people who have rental units and malls and things like that. If you have people who are paying you monthly rent and you're unsure how much of that you're going to be able to collect because of this whole situation, maybe better off to do the disaster loan instead of the PPP loan, because the PPP loan is really directed more at people who are looking to have payroll forgiven. Is that accurate?
Yeah, I mean, the way I look at it is if you don't have employees, but you can calculate economic injury as to your business, I mean, the disaster loan is where you want to weave through. You want to get to, and your element of debt forgiveness could be to take a close look at the grants. So some people should look at the grants. I don't know. Yeah, Tom made a good point earlier when we were chatting, not to get people confused with, grants and debt forgiveness, because they are two totally different things. But in the disaster program, there is advances and grants and things of that nature for people to take a close look at to get immediate liquidity.
And Chris, to following up on Keith's point, you put your application in for the disaster loan, and then by the time that probably comes out the other end, we're going to have better guidance on whether or not they can have a disaster loan and a PPP loan. And even though their payroll may be relatively small, but they have other economic damages, to Keith's point, they may want to look at it and see if it makes sense to do both, if that is permitted by Treasury and SBA.
And we don't know whether or not you can do both yet, right?
But we don't know, other than the disaster loans that are currently in place that were made after January 31st. You could still apply for a PPP if you got one of those, but we don't know prospectively whether you can have both at the same time. We'll have to find out.
So Pat from HCDC, you do a lot of SBA lending. What are you hearing on your end, or is it? I mean, do you have any other? Do you have the inside track here?
Yeah, well, I wish I did have some of the inside track, and I want to compliment Tom and Keith on their performance. Lots of very good information. We've gotten some updates from the SBA that are basically some wait and sees. Just got one recently that probably in the last 30 minutes that the SBA is really focusing a lot on the PPP situation right now. I think that they want to get that up and running because they think that is mission critical. I do see, I opened up the Q&A, and I think I see one from Mark Homer about the existing SBA loan. And they have, I want to make sure I use my terms right, so I'm going to get my notebook out. The small business debt relief for 7A, 504, and micro lending products that are out there. That one they've told us to hold tight for probably the next 24 hours, that more information will be coming out. I guess the way the law is written, and I have not read the entire law, they have up to 30 days to make that April 1st payment.
Yeah.
And I think, Tom, you hearing something similar to that?
Yeah, that's exactly right. They have 30 days to begin making those payments from the next due date. So our April 1st is tomorrow. So I would imagine sometime, well, certainly before May 1st, they're going to start in on those payments.
Yeah, so we don't have a real solid on that one just yet, but I know something's going to happen in the next 30 days. So hopefully that will help answer part of that particular question. I think I also saw something in here from a Brad McFadden about private equity-backed businesses. That one is up in the air as we speak. I've had conversations with both Cincy Tech and Queen City Angels. They are both trying to lobby hard to get some sort of change. But as it's written right now, I'm not certain that those organizations have the ability to apply. I don't know, Keith or Tom, have you heard anything about that?
I have not.
I'm hearing a lot of disgruntled private equity and venture capital funds out there that want access to this, but are starting to get advice from counsel that it's not looking likely.
Yeah, that's what we're hearing too. I don't have anything definitive there, but I do know that there's some questions around that. Another one I see here from Terry Witt. What about churches? As long as they're a 501c3, I understand that they can apply for the PPP. I'm not sure about the EIDL.
Nonprofits are okay for the EIDL as well.
Okay. Yeah, because the business center, the incubator that we run in Norwood also is a 501c3. So we too, like our church friends, are trying to hope to qualify for, to help us during this kind of strenuous time frame. But yeah, I wish I had some more information. I mean, literally, we've gotten 5 different messages in a day since, from the SBA. Probably the most, I wouldn't say alarming, but the one that I thought was the best came out of Kentucky, that it's like, bear with us. I know you're all typing questions to us. As soon as we get information, we're going to pass it along to you. and organizations like HCDC and others are going to pass it along to others as well as soon as we find out. So, like on the small business debt relief, obviously we got 350 borrowers that are in that program. We want to get that information out to them as soon as we know. Right now, we've just been told to pause for a moment. This is a huge, yeah.
A couple things on just to make sure that on that debt relief provision, not only current 7A and 504, but new borrowers as well. They will qualify for that first 6 months payment by SBA. And then the other thing, when you talked about the churches, there was a question about the churches. They can qualify, but affiliation rules will apply to nonprofits. So we've had some questions. I've had some questions come in from some groups that are affiliated with maybe a larger church body, and they will be deemed to have the number of employees of the overall body, not just their particular group. And that may render some people ineligible for a EIDL or a PPP loan.
What about a business that just started? So technically you didn't have any employees in January, February, or last year. Are they qualified for the PPP loan? And if so, how do they calculate their payroll?
Yeah, Tom, I think there's a specific date in February that they had to be started or commenced operations to qualify for the PPP loan. Yes. So they are eligible, but they don't get to pick the dual formula. So they have to pick the benefit that some business owners will get as part of the PPP loan is they'll get to benchmark their forgiveness, the ultimate debt forgiveness, against a bifurcated formula option that bases it on this year's payroll as your benchmark or last year's entire year payroll. And for companies that just started up this year, clearly they're only going to get to compare against one option.
Yeah, their option, Keith, that's exactly right. Their option is from January 1 of this year to February 29 is how they will calculate their payroll.
So if you didn't open until March, you don't qualify, basically. You'd have to go the disaster route.
No, you would, if you didn't exist on, well, actually, I'd say that's probably true. February 15th, the eligibility is February 15th of this year. You have to be in existence. So, okay. Yes.
And just to re-clarify, there's two separate sort of buckets here that the SBA is offering. There's the PPP bucket, which you apply for from a local bank. Then there's the disaster loan, which is something that you're going to apply for on the SBA website, the federal website. The disaster loan comes with a $10,000 grant, basically, that they give you up front that you keep whether you pay back the loan or not, or whether you get qualified for the loan or not. And those are the two kind of options that you have, correct?
Chris, the grant on the EIDL, once you apply and are approved, you have to request that grant.
Got it. It's not automatic. All right.
Automatically.
Okay. And then when considering what lender to apply through for the PPP, is there a better answer? Do you want to go to a big bank that does a lot of SBA lending, or is a small community bank going to get you the same consideration?
Your first and best is going to be the lender you're working with, so long as they have an SBA program. Because what we're hearing at Von Lehman is lenders are clearly going to line up and serve their customers first and foremost, and they're going to get priority. So if unfortunately, if you're one of those companies that doesn't bank with a bank that has an SBA program, you probably need to reach out to your accountant, your attorney, whoever, to figure out who the SBA lender of choice is. So maybe they can use their relationship to wedge you into the priority line at a major SBA institution.
I think that's right. And now the one advantage that non-approved 7A lenders, and I'm not going to say it's an advantage, but this program does open up to non-SBA approved lenders the ability to get approved to process and close these loans. And I think that, again, the processing of the loans is should be fairly streamlined because of the lack of personal financials they have to review and the lack of collateral. But I agree with Keith. If you've got a relationship with a lender, they already know you, they know what you're going through. Frankly, they may have some of the information they're going to need for the application. So that's got to be a starting point.
Yeah, and I was going to say and add that, hey, some people don't have a lending relationship, but you got a depository. You know, you're putting your money through somewhere. So if you don't have a particular lender, go to whoever your depository is located, talk to your branch manager, and get in the queue that way. Because, you know, these SBA lenders, why they opened up and made a difference between the two, the EIDL and the SBA versus the PPP, they wanted the PPP to have, you know, a better delivery vehicle, and that's why they're leveraging the SBA, you know, from that. So, you know, so if you don't have a lender, go to your depository, talk to them. You got a reputation, you know, try to find that champion for you within that bank. So, and Cincinnati is very well banked from an SBA standpoint. All of our large institutions do SBA, you know, and a lot of our community banks also do SBA. So, I mean, I think we have close to 50 financial institutions in Cincinnati, and I'd be pretty game to say at least 40 of them do some sort of SBA affiliated lending right now.
If I can add something, obviously we've spoken a lot on the loan programs that are part of the CARES Act. I want the audience to know there's a lot in the CARES Act, and we're not going to get into the details, but it covers business aspects of loan programs. There's tax law changes. There's also individual and employee assistance, whether we're talking about unemployment benefits, et cetera. And I guess I bring that up because the CARES Act is huge. We're talking about very small subsection, a lot of money at play. And it's going to be important that you do get with your banker, get with your attorney. Obviously, we have one here on the screen. Get with your CPA. Certainly, they're on the screen also. They're going to be able to help get through, identify where the best areas of this CARES Act is for you as a business owner, and also potentially for your employees.
Yeah, that's a good point, because the availability now of unemployment compensation, some other things, that's likewise supposed to have been streamlined. So everybody on the call should be aware of that. Should they have need for services like that? One of the taxability issues is on this loan forgiveness, and a lot of people typically you get any debt forgiven, it becomes income to the party whose debt was forgiven, and that's not going to be the case. You don't have to include that in your income as a borrower who has debt forgiveness. So there are little nuances in these in this act that really are going to help people out. And I've talked to Keith, talked to the accountants. They're all over this stuff.
Yeah, and we'll send out some collaterals afterwards that have the very nitty gritty details of what these programs are, so that you can all, you know, see them and have something to refer to. I personally am in this situation, and there's several questions also on the Q&A. You know, you've got maybe you're closed, or you've got very little business currently, and you apply for this PPP loan and you get it. You hire everyone back, but you're not open. So you're basically paying them to do nothing for a couple months, well, for however long, but it's forgiven for up to 8 weeks. Is that okay? I mean, is there any guidance around that? I mean, or is it better again to wait and actually rehire them when you have something for them to do?
One of the things to take into account is if you wait too long past the June 30 date to apply, you could be out. Meaning, even if all of a sudden it makes sense to you to do that PPP loan, you may have missed the window.
Or if they run out of funds, right?
Or if they run out of funds.
Right.
So you know, I look at that and say, okay, let's say you borrow the money and business is dead, and you pay people for a month, and all of a sudden you're like, you know, I don't know if I can keep doing this. You know, you have to make business decisions at the end of that 2 months. And whether that means you lay people off again and they go to unemployment or not, the goal of this is to keep people employed so that when the economy does turn back around and we start to see an uptick, businesses are already in the position where they've got their employees in place. They haven't let them go, they haven't scattered, and they can kind of pick up where they left off. Of course, right now we don't know what's going to happen as far as the the economy relative to when people are going to get back to work. So it's a good concept. We just don't know how it's going to ultimately play out based on the timing of people getting back to work.
Excellent. Still trying to sort through any of these Q&As. Pat, I don't know if you've been looking through them and you see anything that you can speak to. It's hard to keep up with them all.
Yeah, I'm actually trying to monitor some emails that are supposedly coming in from SBA, so nothing new to report, but it looks like there's going to be some information hopefully coming out a little bit later today and tomorrow morning that hopefully will help the PPP situation.
Does that PPP cover interest paid on lease or credit card payments or on equipment like trucks?
So my interpretation of the interest expense that is covered is that from a forgiveness perspective, it won't be used in your borrowing base to calculate the amount that your loan is actually based on. But when it comes to forgiveness, you can include interest expense associated with your credit cards. But again, some of these areas, and this is the same, Tom can attest to this. I mean, we do SBA loans all the time, 7A loans all the time, and depending on which banking institution you go to, they have a different interpretation of the rules. And so it's best to really consult with your lending institution about what they're going to allow and what they won't. That one seems to be pretty cut and dry. Interest payments associated with your credit card should be an item that you get some to use in your calculation for purposes of getting your debt forgiveness.
And I would say the same thing on the truck. If the truck is owned by the business and used for the business, if you've got a loan against it that pre-existed February 15th, that is a pre-existing debt obligation for the business, and interest on those types of obligations can be included in the forgiveness calculation. Now, we are still waiting on some guidance on that, but the broad language of the act, of the bill, says pre-existing debt obligations, and interest on that truck payment, I think, should count.
And Chris, I saw that question as well, and I just want to make sure whoever asked that is clear, because I thought the way it was worded when I breezed through it earlier, just to be clear, principal payments are not included. It's just interest.
Got it. And one other clarification people are asking about, is there any downfall to applying? I know we don't know whether you can apply for both loans or not, but is there any downfall in applying to the disaster loan and then requesting the $10,000 grant now while you wait to find out about the PPP loan and the final guidance there?
So what I've actually been told on that, and Tom, I don't know if you can substantiate this or if it's just hearsay, but a couple of the major lenders, SBA lenders in town, told me that you had effectively through tonight to basically apply for the disaster loan and apply for the PPP loan. But in any event, if you've applied for the PPP loan and got the disaster loan, that the PPP loan would actually be used to refinance the disaster loan that you have on your books. It sounds like some of the things I'm hearing today that's contradicting that stance, but it's just a great example of all the misinformation that's floating around out there, and how I think we're just going to have to wait and be patient and see what ultimately comes out over the next 24 to 48 hours.
That's absolutely spot on. There's language going both ways about whether you can apply and have both or whether you can't. If there is a timing issue relative to applying for the disaster loan, though, I guess I would err on the side of saying, okay, if you want to apply for it and ask for the advance, the $10,000 advance, if that is going to make or break your business, then I don't know what the downside is, assuming you get approved for a disaster loan and they say, geez, you can't work in the PPP realm now. You could always repay the disaster loan or refuse the disaster loan and get into the PPP if you needed to. But that's where the guidance, we have to wait on the guidance on that.
Yeah, and I just saw someone come across in the chat saying the PPP loan can't have a deadline tonight. I didn't say that. I said that tonight was you to do disaster loan and PPP loan. Yeah, exactly.
Yeah, PPP loans, that deadline for applications June 30th, and frankly, we don't even have an application yet, so
Right.
nobody can apply for a PPP loan yet.
The best question and answer says, it's a lot of info on here. It's totally true. There's so many different things to talk about and unknowns, and we're sort of in a hurry up and wait mode right now while we wait for guidance from the SBA. But you guys have provided a lot of really valuable information. I'm looking through the chat here, trying to find some more questions that might apply to, there's some things on here that I know the answer to that I can kind of type once I get, once we wrap this up.
I was going to say, Chris, as part of that question about a lot of information, they also had a nice comment in there. We should contact our accountant or our attorney. I really think that, not that I'm trying to plug these folks, but I am going to do that. You don't live under a rock, talk to people and talk to your professional advisors so they get it. I mean, the six of us here know quite a bit, but we don't know everything right now. There's going to be more guidance that comes out from the SBA here in the next 24, 36 hours. It's going to be very helpful. There's going to be information that comes out to the Treasury. Pay attention to those things. Ask questions. The unasked question is going to be the dumb question. I'll put it that way. Because I think that was, when I read that one, when it came across our screen, I was like, that was brilliant. It is a lot of information. There's a lot of things going on. If you saw the 22 open questions we have right now, I mean, these are very specific, and I'm not sure we have answers to all these 22 questions.
No doubt. What about this last question here from John? Are disaster loan amounts based on lost revenue or lost gross profit? We know what the PPP loan is based on, but what about the disaster loan? I went through and applied, on the old website. It took forever because it kept crashing, and they never even asked how much money I wanted.
That's the thing. The clients and the people I've talked to, you submit the information and SBA makes the decision. So I'm not sure that we know what they're basing their decisions on. And frankly, I haven't. Keith, tell me if you've had this experience. I've had clients that are approved, but they still haven't heard how much they've been approved for. And so they're still waiting to find out that amount, number one, and number two, how it's going to be dispersed. And from my perspective, I wonder how it's going to be documented. For example, promissory note and with the EIDLs, that's collateralized. So, how are they going to get their collateral and things of that nature? So that's a tough question right there.
Yeah, I mean, I would agree. The disaster loans are a little bit of a black curtain item. There was a first wave of disaster loans where you could go in and suggest an amount to them, but they didn't ask an analysis for why you were asking for that amount. We heard some rules of thumb that were, basically that too was basically they were going to cap your limit at 2.5 times or 3 times your monthly gross profit. But all that stuff was anecdotal and no one really knew.
One other note here that just popped in, and I went through this myself. So I already applied for the disaster loan last week or whatever. And from what I understand today, they've launched a new disaster loan website. You have to go back on and reapply even if you had done so previously. Is that correct?
That's what I'm reading right now that just came across.
Yeah, I saw something about that this morning. So hopefully that website doesn't crash like the last one did. It's crazy.
I had a client that there was a question earlier about, if you've got multiple companies, should you apply for associated companies? So I had a client today that emailed me about that. She said, I submitted 2 of my companies and I held off and was doing my next one today. And I got on the website's completely different. So she was pretty frustrated with the process.
Yeah, it definitely is a moving target for sure. Well, we're coming to a close. It's been almost an hour. We still have some unanswered questions in the Q&A. I believe, Matt, I don't know if we're able to go through and type some answers to these questions after this meeting ends. But if we're able to do that, we will, because some of these I do know the answer to, and I'm sure you guys can provide some guidance on that as well. And then we're going to send out a link to everyone with some collaterals that that Tom had put together, and also Keith, I believe, and also the recording link to this webinar, so you can. I need to rewatch it because I was so busy reading. I didn't even hear half of what you guys said. So I trust that it was good. Thank you all very much for participating. And Matt, are we able to answer these questions, or will this Q&A go away when we close things up?
Yeah, we'll look to capture answers to these questions in text. And if they don't, because everyone will be jumping off the call, we'll look to circle that back around to all registered attendees in conjunction with the recording and the materials and whatnot. So we'll probably just create a document, if you will, kind of answering questions.
And we'll send that out as well. Awesome. Thank you all very much for taking time out of your busy days and putting pants on today to participate in this call. We appreciate it. Thank you all very much.
Thanks, Chris.